for those of you who have never bought gold and silver, I just want to quickly go through what I think is the best way for a beginner to start dipping his or her toe in the water, so to speak. So here in the UK, for silver, I think 1 ounce silver Britannias, that's the best really way to start. And I say start because you need to, start somewhere. And the reason why I like these is because it's a 1 troy ounce. Yeah, I know there's Charles there. Many people don't like him, like me, but silver is silver. You need to put that aside. Yeah, the reason I like this in the UK as well is because it's a coin of the realm, which means it's capital gains tax-free.
You need to pay close attention if you own gold or silver, as the world's bullion markets could be experiencing a historic moment. An alarm is being raised by Mario Innecco. The paper-based gold and silver system in the world is about to collapse. He warns, behind the scenes, actual metal is disappearing, and the London bullion market, which used to be the center of the world's gold trading, is distressingly stressed. The fact that the spot price of silver is presently greater than the futures price indicates that, even while paper contracts are still growing, real, deliverable metal is running low. Gold prices have risen past $4,200 an ounce, setting new records. Testing amounts of silver have not been observed since 2011. Even big banks like UBS and HSBC are discreetly acknowledging that supply problems are getting worse more quickly than anticipated. Mario claims that this is the start of a complete collapse in trust in paper, gold, and silver, not just another market cycle. Be sure to like, subscribe, and hit the notification bell for more insights into gold, silver, and precious metals investing.
But it was when I learned actually that the bullion banks were basically paper peddlers. I learned that they dealt in paper, not real gold or silver for that matter. And the reason I'm going to talk about that today is because we're seeing the mother of all squeezes. It looks like it's going to become on the LBMA market, London Bullion Market Association, which is basically a world market out of London. It's traded on the foreign exchange market. It's over the counter. It's very thinly regulated. And for those of you who haven't really bought gold and silver, I don't think it's too late. Should we be taking profits? That's the other question you see a lot out there. Well, do I think about that? Not really. Not my physical gold and silver. Maybe the precious metals mining stocks one day, or if a company does really well compared to others, get rid of some of it and maybe buy a cheaper one or buy some physical gold and silver. But the question that I've always asked myself these last 20 years, when I get discouraged or when I have doubts about holding on to my gold and silver, there's a few questions I ask myself. Do you trust the banks? So, no, that ticks a box. Do you trust government? No, that's another box. Do you trust the central banks? No, that's another box. Do you think they're going to keep inflating the currency supply and the credit markets? Tick. So that's the way I look at it. Yes, we will probably see corrections along the way. We might even see a correction that will last several years, like 2011 to 2020. Or even 2021, it lasted a long time. Do I think that's coming soon? I don't think so. I think right now what we're seeing is, and I don't like to say this time is different, but back in the 2000s, there wasn't any concern prior to the '08 crisis about the monetary system, about central banks. Now it's completely different. I mean, you just have to look at the debt all around the world. I think it's up to like 330 trillion world debt. The US government here, the public debt, is quickly approaching 38 trillion. We're at 37.6 trillion. In the UK, it's not any better. It's not any better even in China. It's not any better in France. It's not any better in Germany, which is a shame because they used to be quite prudent with their debt, but in the last few years that's gone out the window. I guess the only country that doesn't have that big of a national debt, ironically, is Russia. I think they're like at I can have a look here. Russia, 21.4% debt to GDP. I mean, that's really low. I still think that's bad, but compared to the US, where we are, I think right now at 124%, and that's the whole debt, is not just the debt held by the public. Debt held by the public is a bit lower. It's around 100%, but debt is debt. So yeah, ask yourself those questions and then decide whether you want to get rid of your gold and silver. Of course, you might need it for an emergency. Let's talk about the bullion banks now. And when I really learned, when it was confirmed to me what Bill Murphy and Chris Powell and others, but Bill Murphy and Chris Powell especially, from gata.org, GATA.org. I'm going to put a link to their website in the description. I've had Bill Murphy on before. It's the Gold Antitrust Action Committee. They're the ones who opened my eyes in the early 2000s when I started buying gold, and I could see that the markets looked suspect. Why? How did I see that? Well, because I watched the markets, financial markets, bond markets, every day. That was my job. I worked as a futures and options broker in the bond market. And when I bought gold in '02, I started following gold, and I could see some patterns that didn't make sense. Things happening always at the same time. So the Gold Antitrust Action Committee was organized in the fall of 1998 to expose, oppose, and litigate against collusion to control the price and supply of gold and related financial instruments. The committee arose from essays by Bill Murphy, a financial commentator on the internet, and Chris Powell, a newspaper editor in Connecticut. So I won't go any further. You can read this yourself if you go into their website, but suffice it to say, they opened my eyes to this. And then a year or two later, my mother, she had some money that she wanted me to look after because my father had passed away, and my mom didn't know much about money, still doesn't, I would say. But we opened an account at Citibank, and I'm going to tell you the name of the bank, Citibank, in Switzerland. And I decided to buy gold.
According to Mario Innecco, the bullion banks have been selling a false illusion for decades. They have been selling synthetic paper gold and paper silver, which never really existed, in place of actual metal. Through an exception, these banks produced false liquidity using the London Stock Exchange's LBMA and the New York Stock Exchange's COMEX. They can exchange paper contracts across borders using this technology without ever having to deliver actual metal. That illusion is going away today. Real metal is in high demand on the spot market, and since 2021, London's vault inventories have fallen by around 25%. Real-world scarcity is pushing the paper markets upward. Mario relates this to the global debt crisis, which is a far more significant issue. You can't maintain a fiat system without controlling gold and silver. The United States alone is currently paying almost $1 trillion in interest year on a global debt of around $330 trillion. Make sure to like, subscribe, and click the bell icon to get notified whenever we upload new content. We really appreciate your support.
And he said, London silver market verges on silver delivery default. And he was right. That's what we've got right now. That's why the spot price through the LBMA mechanism is so much higher than the futures. It's dragging the futures price higher because there is no silver in London to be delivered. They've been lying about what they really trade. Yes, there are people out there, and I'm not going to name them, but you probably know who I'm talking about, is someone that has artificial hair. He said a few years ago, oh, there's There's like a Niagara Falls of silver out there. There's so much silver. The silver squeeze will never happen, right? Well, all these people who try to discredit those of us who've been trying to warn about this fraudulent nature of the bullion banks and the way they trade through the LBMA, they've been totally discredited now with this massive squeeze in silver. And what's going to solve this squeeze in silver? Well, prices. Higher, much higher prices. I guess there will always be some people who will sell out. But I don't think it's at 50. It's going to be a lot higher. And I think it's going to totally discredit the LBMA. And there's a saying about lies that usually they come out. And I've looked it up here. One saying is, truth is the daughter of time. And it says, it suggests that secrets and lies will be exposed over time. So I think that's what we're seeing now. And the reason why this lie and this truth have been covered up is because gold and silver are at the heart of controlling or keeping this fiat currency Ponzi scheme alive. And the way they've done it is through the LBMA and the COMEX as well, because the bullion banks that trade on the LBMA, they trade on the COMEX. They do the EFP mechanism as well, which I've spoken about with Eric Young or King Kong. So it's all intertwined. And so I don't think COMEX is any better. So to sum up, what the LBMA and the COMEX are, and I made a video about this, they're just glorified bucket shops. And what are bucket shops? Well, they used to be places where you could bet on the price of stocks in the US. You actually didn't buy the stock, you bet on the price. And Jesse Livermore started his career in the bucket shops because he didn't have a big enough stake to open an account with a bona fide broker. So yeah, that's how precarious things are for a monetary system.
Mario Innecco exposes a startling reality regarding the banking industry and the delusion of gold ownership. He thought that gold was securely kept in one of the world's most secure financial hubs when he purchased it for his mother years ago through Citibank in Switzerland. However, everything changed when he attempted to remove the gold in order to physically take control of it. The bank turned it down. They informed him that the actual gold he possessed was FX gold, a paper-based exposure to currency markets. He explains how when he insisted on delivery, Citibank grew obviously uneasy and even set up a private meeting in London to help him relax. However, their justifications merely highlighted the system's overall vulnerability. He recognized that the large banks were acting as paper peddlers, offering claims to unrealized gold. He became aware of the wider fraud occurring in the world's bullion markets as a result of this encounter, particularly through the London Bullion Market Association and COMEX in New York. He clarifies that these organizations exchange contracts across borders using financial tools without ever transferring actual metal. It's a strategy that avoids actual delivery while creating the appearance of liquidity. Mario makes a clear connection between this and the current silver problem. He cites recent warnings from insiders like David Jensen, who claimed that a delivery default was imminent in London's silver market. These warnings have since been shown to be accurate. The fact that the spot price is greater than futures indicates that there is a shortage of physical silver. If you enjoyed this video, don't forget to hit the like button, subscribe to our channel, and turn on notifications so you're always up to date. Thanks for watching.